Hey traders, and welcome back to some awesome market insights presented by yours truly, Richard, serving traders responsibly here with Orbex. Now today is FX Majors Day. We're going to take a look at the FX Majors, obviously, and it is the 8th of February 2019. It is 10:26 a.m. Eastern European Standard Time, and today's video might just be one of the most important videos for the month, in a sense that I'm seeing multiple patterns possibly aligning, in a sense that something could be coming, something could be happening, and trends might be shifting. In other words, the US dollar might go soft, and this could be euros and pounds time, okay? And I'm seeing some significant strength possibly coming for the yen, but also for the CAD as well, basically commodity currencies such as AUD, NZD, and CAD. So let's just take a look at the economic calendar first. As you can actually see, it's not really the busiest day, the busiest Friday. However, some patterns, as I previously said, some patterns and structures are looking like they could be ending very, very soon, and something, as I said, could be happening. Something could be coming, and trends might be shifting. Now, today's market movers obviously would be the RBA monetary policy statement, and the tone was quite dovish, let's say, for the year. Followed by the Swiss franc unemployment rate, which remained flat. Now, the trade balance for Germany actually increased, so that's slightly positive for the euro. And we do have the CAD unemployment change coming. As you can see, some positive results could be lining up for the CAD. So let's just see how this could actually translate on the charts, right? I'm going to kick this off with the dollar index on the 2-hour time frame, and as you guys can actually see, this could be a running contracting triangle on a larger degree for a minor B right here, red, in a sense that this could be A, B, C, D, E, all right, which could be starting a bearish impulse, a bearish C leg, let's say, in an impulsive manner, 5-wave sequence. And I cannot stop noticing the bearish divergence coming up right there, okay? But also the possibility, let's say, for instance, if this is not a triangle and this could be just a simple ABC move right here, we do have the 100% Fibonacci extensions from these points to actually point us out towards the possibility for a drop possibly coming for the US dollar. What could cause that then? You know, the economic calendar doesn't really show something very big like that, so this could actually take place somewhere around next week, but the trends could be starting today. So let's just see. Now, the way, as you guys can actually see, the way I'm labeling the drop would be in an A, B, C, so for this minor A red, and then the triangle. But what if it's not really like that, right? What if it is an ABC in a W right here, then an X, then A, and this just to be the ABC that I was previously talking about. So AB, still the C leg should actually occur, right? So this is, I mean, we do have two patterns pointing us in the same, towards the same possible direction, right? For the dollar index, for the DXY. Now, this was the 2-hour time frame. Now, as you guys can actually see, I do have a level that I would be monitoring, which is 96.80. For the dollar, and the bearish divergence should be showing some possible resistance right there. But enough about the dollar. Let's just go to the EURUSD on the 2-hour time frame, and the way I'm seeing this as well, just like the dollar index, slightly different, but the structure is still pointing towards the possibility for a bullish divergence right here on the euro to take on effect possibly, and to send euro towards the upside, right? However, if this is a wave 2, then this move should not really surpass these levels. So the lowest low, basically the start of 1, which would be somewhere around 1.12904. However, the structure can actually allow this to be a B wave. In other words, this B wave could be somewhere around here. okay, but still it would point on the upside. And the B leg, of course, could go lower than the start of A as well. So the move on the downside could be slightly alarming, and it can actually be what they call as a bear trap. Okay, so keep an eye out, guys. Be careful right there, because the euro still has something to show, okay, possibly a surprise. Now the pound, however, the pound US dollar, and let's just finish up. I'm going to go on the pound right now, but let me just show you how I'm actually labeling this in an A, B, so leading diagonal in A, then corrective B zigzag, and the ending diagonal in the C leg. So typical either A or 1. Okay, now the B leg shows basically a powerful C on the downside, powerful bearish move, but it is showing a possibility of a bullish divergence right around the corner. So heads up, this could actually fly high from here. Okay, now enough about the euro. Let's just jump on the pound dollar, and the way I'm labeling this entire piece is in a corrective structure. So in other words, the pound USD, pound dollar, could actually form an ending diagonal towards the upside in a C leg, which means that this could be the first leg, right? Like A right here, running flat in B, and a clean impulsive move on the C leg. And then the correction to actually occur. As you guys can actually see, I'm labeling it in a double free, in a WXY. So WX, A, B, and then a clean 1, 2, 3, 4, 5 on the downside. And it is actually lining up with the 38.2. Ashley wanted to tag the 50% right there. And from W and for 1, minor 1 green. And from the extensions, 150, 161.8, and basically wanting to tag this 200%. So there is a bullish divergence right there visible, and yesterday's move on the pound dollar could actually represent the first leg, the first move for the actually upside, which means that we could be actually located right now in a sharp correction typical for a wave 2, and something could trigger the pound dollar to just fly on the upside, right? So that's basically the insight for the pound. Now the USD yen, basically the dollar yen, this entire rise from the actual flash crash, which actually occurred previously, this entire rise, I'm actually labeling it in a corrective structure, in a sense that this is A, and this is running flat in B, and then the C leg could take on either an ending diagonal form, or this could be just 1, 2, the third impulsive leg, and this sideways move, it would be the fourth wave, which means that it could actually want to tag these Fibonacci levels, which are actually lining up. So there's a powerful resistance right there, in my personal opinion, in a sense that from this move towards this move, 61.8 Fibonacci extensions is actually lining up with the entire fall. So the golden ratio is actually there, okay? Now, what this could do is, obviously, this could rise one more time to give a proper bearish divergence, and we do see the bearish divergence right about there, okay? Now, on the pound Swiss, however, this is looking like a, could be a reversal pattern. Usually these ending diagonals are reversal patterns, in a sense that the way it rose, this could be, let's say, a C leg to possibly end a much bigger structure, which means that the move on the downside could be quite insignificant, let's say. But let's just see how I'm labeling this. I'm labeling it as a 1, 2, then the third leg with a channel, which is pretty normal for a wave 3, and then the fourth wave, and then let's say the way it rose, the way it's going on the upside. Notice the ending diagonal, the converging lines in which price action is actually contracting and struggling to actually make a decision. This is why price action is quite, let's say, it's vibrating at these levels. Yeah, it's trying to make a decision. So some, or either bulls or bears would actually gain control. In this scenario, the bears could gain scenario for the USD Swiss. So what am I saying here? I'm saying that this ending diagonal is labeled like this: 1, 2, 3, and then what we are on right now, the current location, could be a fourth wave, and this could develop as a triangle as well. As you guys can actually see the upper and lower contracting trend lines for the A, B, C, D, E right there, and not like that, but just to go on the upside, basically make that overshoot for the ending diagonal, and then to possibly gain, basically get rejected from those Fibonacci levels. And as you can see, I am eyeballing the 161.8 on the from the 1 and 2 Fibonacci extensions, but also from 1 and 2 right here, 161.8 right there, and possibly 200%. But frankly, I would actually say that as soon as it would actually hit the 1.0050, then USD Swiss could be in danger and in trouble, let's say. Moving on, USD CAD, right? USD CAD actually dropped, like I previously mentioned, and I'm labeling this B wave in a corrective piece, and I'm inclining to actually say that this could be the start of a larger minor C degree, okay, for the downside, which could put us in a wave 2 position. However, okay, the structure could be slightly different in a expanding flat, let's say, right? If this B wave would be here, then the structure will be W, X, Y, and this type of either running or expanding flat, but doesn't really make a difference. The point is that the direction still would be on the downside as the most likely next move. However, if this wave 2 does not surpass the start of wave 1, then this could actually start a bearish sequence and proper impulse, which would involve an extension, okay? So USD CAD could actually turn bearish. As you can actually see, there is a possibility for an upcoming bearish divergence, and this obviously would need to form one more on the upside for that, right? So the expanding flat scenario could actually could actually happen, and the Fibonacci retracements of this A could actually be the levels which should be watched. So 50% and 61.8. Let me just help you out, guys, with some prices there, right? Because that's why we're here for. So 1.3420 and 1.3480, let's say somewhere around there. And yeah, it should be, it could be the end of a larger pattern, which means that the move on the the downside move, if it comes, should be even larger, right? So many pips ahead to you guys. Looking forward to those moves finalizing. So let's say AUDUSD, as you can actually see the rise, I'm labeling it in a leading diagonal in this intermediate degree A. Okay, so leading diagonal right here in intermediate A green. Then the structure is looking like an expanding flat, okay, in a sense that this is W and then this is X, A, B running flat right there, and the C leg with a powerful move on the downside, right, alarming traders and saying that AUD can't, might have just broken for the downside, is going down. Well, here's the trick. It might not go down. It might go up. And I'm going to tell you why. Because this structure is a typical structure for a wave B in an expanding flat. And this could actually send, after it could be finalizing, could actually send the Aussie towards a bullish, nice journey. Okay? So what am I saying here? I'm saying that the 161.8%, which is 0.70330, could actually be the end of this intermediate B wave, this structure right here and this expanding flat, WXY. So, which could put us towards a bullish divergence possibility, because it is actually lining up for something, right? If I would actually show you something else, let's say if we were to use some, let's say, harmonics, right? From X, A, B, C, and then D, this could put us in a bullish cipher scenario, okay? So it could actually do, it could actually go on the upside, in other words. So Elliott wave is syncing with the harmonics, right? How about that? Now let's just continue with the NZDUSD, and this is the last one for today. Kind of the similar structure like the AUD. However, I am not labeling this as a running or expanding flat yet because of the way this developed on the upside. This could be a leading diagonal just like this one was. Okay, so the way I'm labeling it is in a 1-2 minor 1-2 green, and then minute 1-2 green. Okay, and this could be the sequence for an extension for the upside, which means that the move on the upside could be very violent, like something like a spike, an unexpected thing, right? And this, I'm wondering what could actually come. It's not going to just come overnight, obviously, if it does come, but something is indeed coming. So we just need to be on top of it, and obviously you need to follow me for more videos like this. I'm doing them on a daily basis. So as I said, I'm going to be here all day, every day for you guys, just serving traders responsibly with Orbex, right? So that's enough for today. Now, thank you very much for watching. If you did enjoy this, if you did like the video, if you consider it helps you, then please support me. I'm doing this thing for you guys, so I need your support. Just hit the thumbs up button, please. And until next time, as I like to say to all my traders, stay in the green and many pips ahead.